Welcome to the Crypto Breakdown Show, your guide through the fast-moving world of digital assets. We break down the latest market moves, industry trends, and the big stories shaping the future of crypto. Just a quick reminder, this isn't financial advice. We're here to share news, insights, and updates to help you stay informed and ahead of the curve. All right, let's get started. Recapping some of the top news from October 7th. Today, we've got a whirlwind of a ride to talk about. Bitcoin broke new records, but then a little dip. Are we in for a wild ride, or is this just a pit stop on the moon mission? So, what's the short and sweet? The crypto market just took a 2.73% nosedive in the last 24 hours.
Why?
Well, think of it like this. After a massive party, everyone's a little tired. Bitcoin hit an all-time high, and short-term holders saw a juicy 10% profit. Perfect time to take some cash off the table, right? This profit-taking, combined with some seriously overheated derivatives and overbought signals, led to a much-needed cool-down. Imagine Bitcoin, our fearless leader, charging up a mountain, reaching an incredible $126,223. The excitement was palpable, but then, a quick 3% dip to $122,000. It turns out, when short-term Bitcoin holders are sitting on 10% unrealized profits, they tend to cash out. This profit-taking, especially after a week where the market gained 6.7%, acted like a brake on our speeding rally. Altcoins felt it even more, with XRP, Doge, ADA, and AVAX seeing 4 to 5% declines. Even Filecoin, despite its recent updates, slumped 4% under intense selling pressure. It's a classic, overheated market scenario where things get a bit too frothy and a correction is inevitable. Adding to the cautious mood, we heard whispers from the Federal Reserve. Governor Stephen Miron hinted at a neutral interest rate of 0.5%, influenced by factors like tighter immigration and fiscal pressures. This kind of macro talk can always make investors a little nervous. And let's not forget the shadow of North Korean hackers, who've reportedly stolen over $2 billion in crypto this year, a stark reminder of the risks in our digital frontier. They're getting craftier too, shifting from technical exploits to social engineering, proving that even with innovation, vigilance is key. But don't let the dip fool you, because the good news is bursting through. Asia is seeing a massive power shift, with Japan quietly emerging as the new crypto capital. Their predictable regulatory framework is attracting institutional growth and staking, drawing eyes away from Singapore and Hong Kong. Japan is ready to pop. And speaking of popping, Dogecoin surged 6%. Whales are accumulating, and whispers of Doge being included in retirement funds are making traders eye a breakout to 35 cents. XRP is also on the brink, with traders anticipating SEC ETF deadlines and Fed rate cuts could push it towards $3.10. Even with retail sentiment turning bearish on XRP, historically, that's been a contrarian buy signal. India is jumping into the digital currency game, planning its own RBI-backed digital currency for faster, safer transactions. MetaMask is launching a $30 million rewards program with Linea tokens, hinting at a future MetaMask token. Get ready for those sweet incentives. Malaysia is making history with Facet, launching the world's first stablecoin-powered Islamic digital bank, bridging a massive gap in financial inclusion. BNB hit a new record high above $1,280, fueled by surging activity and a partnership with Chainlink. And guess what? The New York Stock Exchange owner, Intercontinental Exchange, is nearing a whopping $2 billion stake in Polymarket, a crypto-powered prediction market. This shows a massive vote of confidence from traditional finance. We're also seeing incredible innovation with real-world assets, RWAs, gaining traction, bridging traditional finance and blockchain. Bitcoin miners are diversifying into AI cloud contracts, with IREN jumping 9% after securing new NVIDIA GPU deployments. Even financial giants like Morgan Stanley are recommending up to a 4% opportunistic crypto allocation, viewing Bitcoin as digital gold. The NY Mellon is piloting blockchain deposits to overhaul its $2.5 trillion payments processing, showing major banks are embracing tokenization. And talk about mainstream adoption. Tether, a major stablecoin issuer, is planning to propose candidates for a board seat at Italian soccer club Juventus. Meanwhile, a Bitcoin life insurer, yes, you heard that right, has raised $82 million to scale Bitcoin-denominated savings and retirement products. Even S&P Dow Jones Indices is launching a new hybrid index blending 15 cryptocurrencies with 35 crypto-linked stocks, a huge step for institutional adoption. Finally, Solana is proving its strength, rivaling Web2 giants like Palantir and Robinhood with $2.85 billion in annual revenue, not just from memecoins, but from diverse DeFi and emerging sectors. While crypto has its own rhythm, it's also dancing to the tune of the broader global economy. We're seeing asset inflation fears from Citadel CEO Ken Griffin as gold futures top $4,000 an ounce, a 50% gain in 2025. The US dollar is weakening by 10%, indicating a shift away from the dollar due to sovereign risk. Investors are flocking to hard assets like gold and Bitcoin, especially with US government shutdown fears and expected interest rate cuts. The declining MOVE index signals easier financial conditions, which typically favors risk assets like crypto. However, we also need to keep an eye on the dollar index and rising 10-year Treasury yields, which can signal caution. It's a complex interplay, but the overall trend points to a flight to digital assets and gold amidst global economic shifts. So, what's the takeaway from today's wild ride? The dip was a healthy correction, a moment for profit takers to step aside and for the market to cool its jets. But the underlying narrative is overwhelmingly bullish: massive institutional adoption, groundbreaking innovation, and a global shift towards digital assets. Will institutional buyers absorb the selling pressure, pushing Bitcoin past $125,000, or are we in for a deeper shakeout? Keep your eyes peeled for the next crucial economic data. Now, I want to hear from you. Do you think this dip is just a speed bump on the road to higher highs, or are we in for a longer consolidation? Let me know in the comments below. That's a wrap for this edition of the Crypto Breakdown Show. Whether the market's pumping, dumping, or just drifting sideways, we're here to help you navigate it all. If you enjoyed the episode, be sure to like, subscribe, and share it with someone who's crypto curious. Thanks for listening, and remember, no matter where the charts go, stay grounded, stay informed, and stay crypto smart. Until next time.